Welcome back to Wednesday Wisdom. My name's Adam, and I'll be helping you analyze exactly what happened to the US dollar index, gold, and USD JPY overnight. Let's get into this. Let's start by analyzing exactly what happened to the US dollar index, the Dixie. Now we can see here that it held at a stable level of 106 after last week's strong non-farm payroll data, despite expectations for a Fed rate cut in December. Attention now shifts to the November CPI data, which is forecasted to show a slight inflation uptick from 2.6 at previous to 2.7 forecasted. The dollar gained strength due to geopolitical tensions and market caution ahead of the inflation release. It rose for a second consecutive day, supported by higher treasury yields. Despite a dovish outlook, concerns about persistent inflation persists, keeping the US dollar index near 106. Now, technically speaking, we can see that the indicators are kind of mixed. The RSI is weakening, and the MACD suggests bearish pressure. Immediate resistance is seen as at 106.43, with further hurdles at 106.72. If price does come down, we do have support levels at 105.74 to 105.72, with further downsides targeting 105.05 and 105. Let's take a look at everyone's favorite pair, gold. Now, gold has been on a strong bullish run, and it strengthened further on Tuesday, reaching a 2 week high just below 2700. Now, despite the US dollar's recovery, the gold price rebounded from an 8 day low of 2613, driven by geopolitical tension and optimism surrounding China's economic stimulus following weak inflation data. The pause is rising US Treasury yields also supported gold, with safe haven demand rising amid Middle East unrest. Now, technically speaking, we can see that gold has shifted from a downtrend to an uptrend, with the RSI rising above the middle line. Gold recently broke through key resistance levels at 2663 and 2666, with a daily close above the 2668 level, which is the 50-day simple moving average. Now, the next resistance is at 2700, with a breakout target of 2721. If upward momentum weakens, support levels between 2663 and 2666 can be seen. Now, a breakout below 2600 would signal a bearish shift in gold. Now we have all seen that the US dollar strengthened on increased demand of safe asset and investor caution ahead of the US CPI report. The widening gap between US and Japanese bond yields weighed on the yen, pushing USD JPY to a 1 week high above 151.5. The yen remained under pressure due to uncertainty over the Bank of Japan's rate hike timelines and rising US Treasury yields. The dollar recovered from a 1 month low, and following the non farm payroll data and expectation of a less dovish Fed. Technically speaking, we can see that USD JPY faces a strong resistance near 151.98, which is a 200-day moving average, and 152.7, which is the 23.6% Fibonacci retracement. A breakout above these levels would drive the pair towards 152.75 and 153. On the downside, we also have support, which lies at 151, with further support at 150.1. And there's a psychological level at 150. Now, a break below this could target 149.5 to 149.45, and the monthly low near 148.65. I would like to thank you all for joining me on today's Wednesday Wisdom, and I'll be back next week. Thank you.